Good evening or good afternoon, everyone. It is March 13th, 2022, 7:04 p.m. Eastern Time, and we had daylight savings today, so we're losing, I think, an hour of sleep. What you're seeing here on the screen is called a radar. This is a platform, trade station platform that allows us to kind of create a watch list. And I usually look at this on Sundays at 3 o'clock p.m. Eastern Time just to see how the futures are trading. Is it trading green at the open? Is it leaving gaps at the open? And right now they're trading slightly green. So you might think that tomorrow might be a green day, but things change quite fast when time moves toward 4 a.m. Eastern Time. This could go negative or maybe go sharply green. The next thing you want to see here is on the right-hand side of the close column. That's in the center here. We have this these red and green colors. That's associated to a technical indicator called a TTM squeeze. And right now we have scanning ES and the Russell. So there looks like there's going to be a pretty big move that is being anticipated for this week. And then a quick note on the 78-minute time frame. This is a time frame that I like to trade on or swing on. There's nothing really developing other than mRNA. Maybe mRNA gets taken out to $100 this week on that squeeze. Okay, so the next page here is the internals, and the internals is basically the engine of the market. You get to see how everything is moving, volume, price, VIX. So at the bottom right-hand corner, I have the Nasdaq futures being displayed, and you can see that it's been in a very choppy downtrend. It extends lower and then it moves back to the green dot, which is a 6-day moving average, and then it pops up above it, pulls right back, and then rolls over, pops up, rolls over, and then pops back up here last week on Wednesday. And then it looks like it's still rolling over because it's still trading under the green dot. Okay, so we're looking for more downside until it gets above that 6-day moving average 3 days in a row. It's hard to assume that this is going to spike all the way up to here to 14,500 in one day. It's not. It's clearly in a downtrend, and by 4 a.m. It could get pretty nasty because it's rolling over right now and not making any attempt to get above that. Well, it's making an attempt right now, but it's not looking like it's doing it successfully, trading above 13,434. We have this trend here that's 2.46 from last week on Friday. That's in telling us that there are dip buyers that are in the market as the market continues to sell off. And then on top of that, we have the UVol DVol, that's the volume, which closed at buy the F and dip tier 1. So it wasn't, the sell-off on Friday was not that aggressive, but we're looking for more selling pressure. So maybe like back here, which was last week on Monday, it was a pretty aggressive sell-off as it went to tier 1. But tier 2, which is near the 700,000 level, negative 700,000 level, that would be buy the F and dip 2. So that's what we're trying to anticipate while we trade light in these treacherous markets. The VIX here is currently down. VIX futures, obviously the fear indicator. It's been doing some weird things after making a 52-week high, and currently it's still hanging on there, that trend where the linear regression line is being projected in these red and green opaque bands. It's right there on the mean at $30, and there's a squeeze that's currently developing on the daily. It looks like a continuation pattern, which is not good. And there looks like a little squeeze here on the 78-minute that might attempt to spike higher and retest the 52-week high that the VIX made here at 36.5. So it looks like it's rolling over, but you got the assumption here is that that squeeze that's scanning here may hold the VIX at the $30 level, and then sometime this week, based on some sort of event, it might spike up and push even higher, maybe to 37 to 40. Okay, so that's not sure exactly what will cause that to happen. It could be the interest rate talks on Wednesday. It could be a series of events coming from overseas. We're not quite sure, right? So we just try to trade based on what we can anticipate. The volume here from the advanced declining on Friday obviously was trading higher. 1,253 companies were trading the green, and then at the end of the day, everything sold off and moved all the way down to negative 1,712, which is about 50% of the companies listed in the exchange was trading lower. Okay, so let's go to the chart and talk about the S&P futures. Okay, and this is what we're going to look at first. On the Nasdaq, we talked about the downtrend because it's still trading under the 6-day moving average. Now we move toward, we move toward the S&P futures, and what we can see here is that you get these bounces above the 6, extends, pulls back, rolls over, bounces, rolls over, bounces, and it's looking like it's going to roll over since it's still trading under the green dot, right? And then it actually opened, if we look closely here, the S&P actually opened inside day of Friday's candle. So that could be a sign that this is, I mean, let's take a look at how the centroid looks like using the Hikinashi candle, and it's still red. Okay, so that really doesn't, even though it's inside day, some people might think that this is a pretty bullish candle, which technically it is. Okay, the day is not over. I think it would have to move way up here in order for it to generate a green Hikinashi candle, and there could be a chance that it could run up in this direction on Monday because of this Magic Mike wick. So that would be about a 2.34% move, which could happen, right? But that I'm going to say is a lower probability of happening. And the reason because there's this gap from April 2021 that's still left open. Okay, so I've been talking about this gap for almost for a very long time, and it made from this point right there, it made a 52-week high here, and then it made another 52-week high here. So 1, 2, 3, 4, 5, 6, 7, 8, 9 52-week highs. One, right? Just all these 52-week highs that's how many is that? So that's the gap. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 52-week highs. Then it starts to go down and fill the gap. Okay, so it's not unusual to see a gap open for this long, but it was opened on purpose, and whoever opened that knew that it was going to get filled sometime. I mean, they're responsible for the gap fill, right? So that's a gap fill that's above my pay grade, and I have every futures gap is above my pay grade. Any gaps actually is above my pay grade. So I don't know who's in charge of that, but I'm pretty sure they're doing something above our pay grade to create a gap and keep it open for a whole entire year. Okay, 952 highs that were created along during that time, and then now we're making lower lows, 1, 2, and I think we get three lower lows, maybe similar to something like baseball, like 3 strikes you're out. So I think they get the 3 lows here. The last low hopefully comes in, well, based on the way it's moving. Yeah, this could be. I mean, if you measure the move from here to the gap fill, that's a 4.4% move, right? And a 4.4% move in one day is a really nasty day. I think it's going to take the whole entire week, okay, because it's a pretty slow market crash. Or if it happens, then it happens within 2 days, maybe around either the first 2 days, that's Monday and Tuesday, right? Or it happens after the TGIF cycle closes, which would be Tuesday, Wednesday, or Wednesday, Thursday, or Thursday, Friday. I don't know which combination it's going to be, but that's a pretty obvious gap fill. And the problem with these gap fills, we just don't know when they're going to get filled. Okay, some are easier. Some gaps are easier than others, right? But this gap has been a very frustrating gap because it's been opened for a whole, pretty much a little less than a year. So brutal. Okay, and yeah, along the way, every Tesla buyer, I mean, hodler, they keep on averaging down, and then all of a sudden they're getting wiped out, or losing, or end up relearning the new definition of hodling, because this is a pretty slow and painful drawdown that they're going through. Okay, especially some of the popular stocks. So this is the plan, and I guess when you look at this chart, you can say that, obviously in hindsight, this is the past couple months from January's high, 52-week high, has been pretty choppy to bearish. And as the market continues to sell off, it's really hard to get into some really good plays that are going to swing for 3 or 4 days. We haven't had any really good follow through on the call side, like on days like this or maybe like that. But here on this follow through, it immediately reversed, right? So we're not in a bull market. We're definitely in a bear market. Bear market is defined by where the price is trading with respect to the 200-day moving average, which is at 4,473. So we are in bear market territory. People are losing money and drawing down, and maybe even dollar cost averaging into some of the beautiful stocks that they think are going to make them super rich in the next what's that number, 4 to 5 years. Okay, so that's what you usually say when you don't know what the time horizon looks like. You just say 4 to 5 years, especially if you don't have a plan. So that's kind of what I picked up on Cathie Wood. You just say 4 to 5 years as your stock keeps on, or your ETF keeps on dropping and making new 52-week lows. Okay, so that's something I learned, but I don't really, that's a pretty 56% haircut is going to make you probably hospitalize you if you ever saw, if someone keeps on talking about the 4 to 5 year horizon and how well the fund is performing over the past 5 years, right? And you're just kind of talking about what's going to happen in the future, which I think it's going to, eventually get up to. There's nothing wrong with ARK. It's just you can tell that there's a little bit of inconsistency between their ETF and their belief. They really believe in the company, right? To believe it such that it's going down and they're still net positive. And it will bounce. We just don't know when, and it's going to go up to 143 to 160. Fill these gaps, because most gaps get filled. And this also, all the gaps down here, these could also get filled too, meaning that the company could go bankrupt, right? So it could go all the way down to $14, or where is it? Holy cow, $14.77. So you might say, well, ARK is a company that is a basket of growth stocks, and you might think, oh, thank you, Matt. What is that saying? FOMC announcement on Fed funds rate on Wednesday might be already priced in, though, 25 basis points. Yeah, if it's already priced in, it's just the way that they talk, whether they're going to increase or decrease. The Fed might say something a little bit that may rally the market if they relax their Fed interest rate plans, right? They said they're going to increase rates based on their plan. They have a plan increasing rates every so often, so that's not going to be good. Yeah, and then there's this ARK daily candlestick chart published by Trend Spider. Let's take a look quickly. Let's see what this chart is showing. Yeah, do you want to explain? So do you want to explain what this means? Like, I'm not really sure. Maybe they're saying that's support or a breakdown level, 55.58. Yeah, I'm not really sure what this means. Yeah, maybe help me out here. I just know that it's going down even lower. So there's gaps at 49, 40, and it could go all the way maybe down to $14. I mean, I'll be interested to. I'd actually pay money to watch Kathy Wood talk about the ETF when it's at 14, because you have to really say something positive or outrageous to make people believe that the ETF is going to go back to making 52-week highs 5 years down the road. Yeah, the pre-pandemic levels will go lower. Okay, yeah. So yeah, you don't need to. Yeah, it's good to have somebody to qualify that ARK is going in a downtrend, but yeah, obviously you can draw a horizontal line, and I guess if the horizontal line connects 1, 2, 3 dots, then you can say that's safe to assume that was maybe short-term resistance, and then yeah, wherever it goes below this is obviously you got bottoms here at 40 and 39, and yeah, with the gaps here, with the gap spaces that are here at 14 and 150, I wouldn't be surprised if ARK goes all the way down to $14, right? And the problem with ARK at $14 is not going to be a smooth, like one of those nice, brilliant gap trades where it just gaps down to 14. It's going to take probably the whole entire year, right? If it gets all the way down here, that would mean that the S&P is getting ready to make a 52-week low with the Nasdaq and the Russell, right? So if ARK drops down to from $50 down to 14 to $10, I think it's pretty safe to say then that the S&P and the Nasdaq are going to make 52-week lows, which when you put it into a calendar, a 52-week low would be pricing in at the end of this at the end of the year in December. So that would be a pretty nasty market if that's the case. So, but in the meantime, like I'm not buying ARK. I've never really talked about ARK. ARK is an important ETF because it models growth. We don't really trade a lot of the companies we trade Roku. They have their largest position is Roku, second largest, along with maybe Tesla, but this is does not look good at any level, and there's a chance it goes all the way down to $14 and fills the whole entire gap, which is pretty amazing because it tried to fill the gaps here, right? So this is pre-pandemic. This is during the pandemic as it sold off down to 33. I guess some sort of intervention here helped the market create place a bottom here and avoid filling all these gaps at 13 and 12, right? Maybe the tech innovation for all the things where people are expected to stay at home, the growth in those sectors helped make the pandemic a little easier to cope with, and the share price appreciated as a result. But now it's pretty much back with the back to almost where it started, and with the gaps here at $16 to 14, this is a big question mark, but it's now becoming probable, not possible. Well, it's possible, but anything is possible, but the probability has increased. So, and when the S&P gap fills at 4,000, all right, then we should see a flush. And we got to be careful with these things because these market flushes are pretty dangerous. Like it could flush. Let's just say I've seen it in one time where it flushed all the way down for like 4 or 3% while everyone's sleeping, and then when everyone woke up, it was already green and moving higher. Okay, so swinging positions from right now I'm flat and swinging positions long when the chart looks like this and it's trading under the 6-day moving average and a gap fill here. That's not what I'm planning to do. I'm planning to find one inefficient. I'm trying to find an inefficiency in this trade where I see everything flushing and gapping down, and that's probably the best trade we can get this week. And I tried to think it was going to happen last week, but we got that rip your face off rally, okay, on that BLT Magic Mike setup here, where it's either pick the BLT or the Magic Mike, and look like Magic Mike won on that Wednesday with the president, and then it rolls over, and we should get one more flush like this big candle here with another one that was formed like this a while ago. That is the one we're looking for, and it should end up looking like a wick like that. So you get red days, maybe 2. So this could be day 1, and then another red day on day 2, and then on Tuesday it starts selling off aggressively. So that was a 4% drop back here in January 24. So I'm waiting to see if we get that this week, because the price action is pretty damn slow. We've got FOMC. It's just going to be super choppy, right? No one's going to be making millions of dollars unless you buy like a contract for $1 million and it goes to 100%. You don't want to do that in a market like this choppy. But when the market starts picking up and everything is nice and rosy again, then yeah, maybe you would go and risk a little bit of a bigger size on some swings. But here, even my past 2 trades, they haven't worked on Friday and Thursday. So it's just telling me that I should wait for the opportunity to come to me, and that is the opportunity. This is the important point here. It's just to wait for that gap to fill. Now, every single trade you take from here down to here, you got to trade light because the market has so many things that's causing it to move the way it's moving, slowly and painfully. Let's take a look at the futures. So yeah, futures are still green at 0.56 for the Nasdaq and 0.7, and then Bitcoin's down 1.37. We'll see how that looks like at around 4 a.m. Let's go ahead and take a look at the Nasdaq, which is pretty much the same thing as the S&P. And there's a line, you can see there's 1, 2, and then if it breaks through here, there's going to be a 1. Maybe the flush happens tonight, you know, who knows. But yeah, that is not looking good until we get, and I don't see any reversal candle, right? These are not really reversals. This is a reversal candle potential, right? And then it failed. These are not. None of these are reversals. This was a reversal potential. So none of the reversal setups. Looking at the candlestick pattern, they're not holding, and obviously the main reason is because the S&P gap is wanting to get filled sooner than later. All right, so let's go take a look at our beloved Tesla. So it's really depressing to watch I do watch from time to time. I do watch some YouTubers who are hodling Tesla, and it's pretty brutal to watch. Now it's getting even worse. So they're going through every single. It's just I don't know how to explain it, but it's pretty tough to watch. And right, there's so many gaps all the way down to 0, and if we just use simple logic, I don't think Tesla is going to go all the way down to 0, right? If the fundamentals, you look at the business model and the supply and demand, they are doing quite well, and it's a healthy business that has good revenue, good cash flow. But we don't know how much of this price here is inflated, right? Like how much inflated prices, where price spikes up like this, it just means that people are not aware of, you know, how high, what the actual intrinsic value of Tesla is based on the price to earning shares, right, ratio. So in this case here, it's trading at the 200-day moving average, and from an institutional perspective, this is probably a bargain based on, if you use a 200-day moving average, these people will say that Tesla's trading at a bargain, okay? But with the same argument as things can get inflated into a bubble, the opposite holds true, and you can get some serious discounts in Tesla. And if I had to take a guess where that might be, like here's a bearish wolf wave on Tesla. It's showing that it can go down to $23. So I don't think that's going to happen, but there actually is a good chance that Tesla could go to 171. But I'm not going to be buying puts to, you know, and bet my entire life savings. It's just there's a gap there on the monthly, and we don't know exactly how low this thing can go. Until we get a green Hikinashi candle, right, on the monthly, we are not in a position to assume that this is going to make any attempts to reach 1200. Maybe on earnings, if there's a surprise, it might just gap up to 1,200. But in terms of just swinging trades toward higher price targets of 1,000 and 1,200, it doesn't look like that's going to happen for the month of March. So on the monthly chart, Hikinashi is red. Daily is also red, and is trading at the 50-week day moving average. So that's actually not bad. And if the weekly candle for Tesla opens green, then there might be a chance that this weekly candle for Tesla this week ends up becoming green and bouncing toward the 21-week moving average. That's maybe something that can happen, but I'm not gonna, bet on that happening, because my plan is just to wait for the market to gap down. And if that's my plan for Tesla has a really good record of filling gaps, and some people might say it's not a good market to be buying the dips. Okay, but there's going to be certain periods where it does really make sense to buy the dip, right? When it's like gapping down 8% or 7%. So the average move on Tesla is around 4%, 4 to 5%. And if it's already gapping down 5 or 6%, that's more than the daily move on a good, when Tesla moves 5 to 4%, that's a good day. But if it's already doing 4 to 5%, maybe 7% pre-market, then that's the move is already done, right? So you're looking, then you can probably swing it and get trade that gap. So Tesla will be one stock that I'll watch if it gaps down 8% or even down to $700 again on a pre-market gap down. So then I might be looking to buy that dip. On the 78-minute time frame for Tesla, it doesn't look so hot. You can see that there's a series of dojis forming this bear flag, right? Nice and flat. And if we use a fib extension from here to here, then 778 to 757 would be the short-term targets. That would be a 4.74% move, kind of like the average that I'm talking about. And then if it really moves on that daily, this day 6, which is not the best looking A6, this Squeeze Pro has a different formula, because on TTM Squeeze, default TTM Squeeze on Thinkorswim, it's not showing any A6. But if this ends up rolling over again, then we could see Tesla this week go all the way down to $700. And if that happens, then what the price is gonna look like? That's a 12% drop, and that 6-day moving average would be way up here. That would be a 15% pullback or difference. So if you look at the pattern here, it's 1, 2, 3, 4, 5 days. It took 5 days for it to extend such that the 6-day moving average retracement difference is around 17.26. So be careful. So if Tesla gaps down tomorrow or opens up flat, it could go down as low as 757. And then if it does that, you might be thinking, let's buy the dip. Well, you got Tuesday to worry about, and that could also, with whatever's happening geopolitically overseas, if things get more worse, maybe Tuesday morning you get another gapper, and that could be the time to buy. So I'm trying. I think what I see myself doing this week is just to watch for any massive sell-off between Monday and Tuesday, and because of the Fed FOMC pricing in that 25 basis points, that could be a bullish, looking for a bullish mean reversion trade on Wednesday. So I want to watch for that between Monday and Tuesday. So let's take a quick look on the futures. Yeah, futures are still trading flat, right under the 6-day moving average. Going to the next ticker here is Apple. So Apple obviously is a very, very large market cap, and you can see how difficult, like just looking how difficult it is to be trading the puts on these things. But last Friday it sold off pretty hard, and I remember this day where Apple is gapping down 5%, right? So, and that was the initial attack from Russia. Here at this moment, Apple is trading around 2% away from the 6-day moving average. So, and then if we look at the 7-8-minute time frame, it's exactly the same pattern as Tesla. So we can use the Fibonacci extension. So that would be the low right here. This would be the high. Oops. And yeah, it looks like a drop down to 152 to 150, and then depending on, I guess you can see the gap here, 141. I guess that's when the S&P fills the 4,000 gap. Apple will be filling this 141 gap, and that is an approximate 8% move. As you may know, the FOMC could help the markets move higher or lower, which is a problem because if we were going to take these puts, we would need the market for Apple to slowly move in this direction. But if the FOMC becomes positive, then Apple could move sharply against the position, killing the premiums, right? And then start rolling over. And that's the problem with this market. You can clearly see it's going to go down this low, but you don't know when, because every Wednesday there's always a Fed in the market, making things a little bit difficult. Okay, so Apple is definitely in a downtrend, and on the monthly time frame, if we look at the monthly price chart, it seems to have reacted at this orange line, which is the 21-month day. Okay, so that actually coincides with this gap that I talked about in Apple at the 141. Okay, whether it fills on this monthly candle or the next monthly candle, I don't know. On the weekly, it shows a 50-week moving average that's at 148, and then yeah, whatever happens after that, I'm not quite sure. So 141 is a target for Apple, and then when you go into the daily time frame, you can see there's a lot more gaps. But we know that Apple's not one of those companies that's going to go to zero. Right? You can see the gaps all the way down here, and these gaps are a little bit. Apple's a little bit different, harder to interpret the gaps because it's split, right? So many times. So we don't even know how many of these gaps occurred during that split. So we probably shouldn't really. It's not possible. So you might think it's possible that it could go from Apple could go from 150 to 0, okay? And that's, the probability is like 0, right? The probability for it to move to 141 to 150, 138, these are probable and also possible. And with the current trajectory of the market, it looks like the probability is quite high, especially with that S&P gap at 4,000. Amazon. So Amazon is it left a nice little gap there on the announcement of the 20 the stock split, where they will split one share into 20, and they left a gap open. So that gap obviously is going to get filled like it did here, and there's also a nice looking gap here at 2,629, and that would be the target for Amazon to reach maybe I don't know. I think when this gap fills, this would be when the S&P fills the 4,000 gap. I don't know about this one. Okay, so on the monthly chart on Amazon, it's been creating these wicks, and the nearest moving average seems to be this 50-week moving average, right? So it's possible for this there's a monthly squeeze. It's got earnings, and it looks like it's really oversold based on the technical. And you might be thinking, let's buy Amazon on the dip, but we can't because we know that there's an S&P gap at 4,000. Okay, moving on to Google. So Google also is going to split again, I believe. And yeah, it looks like on the monthly, it looks like it's getting about to roll over to any one of these near moving averages. Okay, and there's actually an A6 in Apple, and that's not good. So what that means is this and this is going to project some targets for us. Maybe I'll stick with trading Google because this one has an A6. That's the red one, red dot, and looking for a move to 2,316. Maybe this week if the S&P gap fills. So that would be a 11% drop. Well, let's take a look at the futures. Hard to say that that's going to happen, but who knows? After FOMC, a lot of weird things can happen. Big moves happen on Thursday and Friday usually. Okay, and 70-minute time frame. So there's no squeeze. The squeeze already took place on Friday as it sold off. And yes, there is a gap here, 2,900. I think their stock split is going to be sometime next month, I think. Going to Shop. So Shop it literally got destroyed, and I don't think they've ever done a stock split. So this is a company that could go to zero. But I wouldn't assume that. The probability is obviously looking like it's getting closer and closer. All these gaps are not involved in any stock splits. So this could end up becoming worth 56 bucks. That'd be pretty crazy. And this is a stock that's owned by, I think, held by ARK. Looking at the monthly candle, yeah, it looks, I mean, how would you know if this is now a legitimate buy? It is really extended away from these monthly 6-month moving averages, but this is not a day trade, right? So this is a long-term thing, and I don't even know exactly, like, let's just assume that this is wave 1 here, and that's wave 2, and this is 3. And if I use that Fibonacci extension tool, yeah, it looks like $262 is a possible target if the S&P gap fills here. Yeah, I don't know. I think I would buy. That would be the dip. After that, you can see the fib extensions project into negative 229 and negative 553, which is not possible in the market. Weekly wise, yeah, so it's definitely in this strong downtrend, and looks like it's going to do that, can continue until 262. So why 262 is for the Shop is important, because that's when you see 262, right? That's a pretty big drop from where it is right now. That's a 50% drop, right? And what does that mean? If this is true and Shopify makes a 50% drop, it took it to drop 50% in around 91 days. So if the projection for a shop is 261, that means that the S&P is looking to make a 52-week low. Okay, and that's pretty bad. So we're not sure. We'll just see how price trades with shop around the 200-day moving average and the 200-week moving average. On the 200-day moving average, it's well below that, right? So lots of upside. That's 138%. But the trend is clearly down, and 282 or one of these gaps here, they're going to get filled, but it'll take the whole entire year. So is the S&P 4000 gap the bottom, or is the S&P bottom when it makes a 52-week low? Will that be the bottom? And if that's the case, then that means the whole entire year we're in a massive downtrend. Let's go on to Nvidia. So Nvidia also trading under the 6-day moving average, the 200-day moving average. So it's in a bear market territory. And what I would, like I said, Nvidia would be another go-to trade. So it'll either be whichever is gapping down the most, whether it's Tesla or Nvidia. If this thing is gapping down on Tuesday, so if it sells off Monday, then it's going to roll over and continue lower. If the futures remains green and the S&P futures and the Nasdaq remain green and it starts pushing higher, then we can see that this low here in Nvidia could be the bottom, indicating the bottom for at least the semiconductors. This is a reversal candlestick pattern right here, where the candle jumps over the previous day candle. So Nvidia is showing some signs that a bottom in the tech, at least in semiconductor, that is that's developing. The last time I had a candle over candle is over here, but that actually left a gap open. This was the last legitimate candle over candle, but it got rejected at the 50. And here we're getting another reversal candle, but on Friday we got a bearish engulfing candle, which is pretty nasty. 70-minute time frame showing exactly the same candlestick pattern as Apple and Tesla, and a gap here to retest the psychological target at 206. So I can't really see anything that's going to get me going long, and if I'm going to go short, I'm going to have to go short on the initial spike. But between those two types of trading, I would prefer waiting for the market to flush. I think that would be the easier trade rather than just jumping into something for a 30% win on low risk, right? So VIX right now is at 2.91 negative, so it's risk on, and that could bode well. So if the VIX continues to sell off and stays red and rolls over, that might mean we might have a good green day going into Monday. The next stock is Boeing. So Boeing has lots of gaps, and it actually has this wolf wave, bullish wolf wave that is forming. So I'm actually contemplating on maybe getting into some longer term Boeing trades for this play. That would be August, where that projection line and the apex meet. So 354. So how would I get into this Boeing wolf wave? Well, all I know is that the setup is there, but it's missing the A6, because that's where the Bollinger Bands are contracting, right? And we all know that when the Bollingers contract, there's probably a steady flow of money that's coming in at a certain frequency, causing the bands to contract, right? And then after contraction, we have expansion. So right now, Boeing does not have any TTM squeeze. When it had TTM squeeze back here, it was contracting and then expanded lower. In this case, we don't have a TTM squeeze, so we can't. I don't think the Bollinger Bands are contracting at all. So let's take a quick look. If we turn on the Bollinger Bands, you can see the daily Bollinger Bands are already expanded, and these are kind of like day trades where you buy it and you're looking for a move to the mean of the Bollinger Band, right? But in terms of that bullish wolf wave setup, thinking it's going to go to 354, we need to have price expand like this out of a contracting channel. So I don't see that happening here. And then obviously you don't need to have contraction. You can see these other moments where it just hits the lower bound and just takes off. Let's take a look at what happened there. That I remembered was a wolf wave setup on this one. So in this case, it could be the case where you get that move. However, the S&P gap, if the S&P gap fills, this is not going to work. It's going to drag the whole market down. So it's something to keep an eye out for. If there's any news, maybe that might be a trade, but I'll be watching Boeing. And yes, Boeing does have lots of gaps. So all the way down to 160, down to 121. Okay, so it doesn't look like anything is showing any signs that setup that we can really convince ourselves getting into, especially with FOMC this week. Let's go to the next stock, Netflix. Yeah, look at that. So you got gaps all the way down to 228, and then you got a gap at 500. So and then you got earnings in April. So yeah, even the earnings runs are going to make things a little bit complicated. I guess after the S&P gap fills, then we can remove the uncertainty of that gap fill, and then the charts should start trading above the 6-day moving average here. But this is looking really bad, and Netflix could, if we use this one right here as our fib extension, so 320 down to 284, and then if it really sells off, 181. Yeah, these are all just possible levels. So you can't really see anything that's bullish about this chart until we get above the 6-day moving average, which is 360. Next is Roku. So Roku, just like Boeing, has a bullish wolf wave, but there's no A6 scanning. So the Bollinger Bands are probably not contracting. They probably are still expanding. Let's take a look quickly. Right, so you can see the Bollinger Bands expanding. Nothing going on there. And yes, you can see that when it did bounce on the 24th, right? These are probably, if we circle this level right here, Can't remember what was going on, but I'm pretty sure there was a 78-minute TTM squeeze that right here after the massive flush. Okay, so that's when Apple was down 5%. So yeah, when we talk about this flush, I think the flush that I'm anticipating, I think that's an easier trade in this market where we keep on getting these pre-market gaps lower. And then there's going to probably be a lot of people buying the dip, causing the gaps to fill. I think that's a better strategy in this market for now, rather than trying to, or whatever strategy you have. If you trade like on a smaller time frame, just make sure you're trading really low and light until we get more confirmation about more confirmation coming overseas from the geopolitical issues, or confirmation that the gap in the S&P is filled. Until the gap is filled, it's very hard for that market to reverse and start making 52-week highs. It's got to deal and work with that gap. And finally, let's look at AMD and AVGO. So AMD, we looked at Nvidia, and Nvidia actually had a pretty good reversal candlestick pattern. But when you look at AMD, it's not looking so good. And yeah, it looks like it goes sub 100 down to 80 bucks, 78 bucks in a real hurry. So that does not look so good. And AVGO, bearish engulfing candle. Like I said, bearish engulfing candles are technically bullish short term. So this could maybe pop a little bit and then roll over. I don't see really any, and it does have an A6 scanning here. So the last time AVGO had an A6, it did move a lot higher. This was off earnings though. This was not off earnings. This one squeezed a lot higher when the bands were expanding from a contracted state. AVGO is contracting, so this one actually has a potential of making a big move once it picks a direction and expands. Is Lucid good for puts? So Lucid, yeah, so they all look like they're going to roll over. And I mean, the puts, there's a gap at the 20. Yeah, I don't know. Yeah, so most of the charts look like this, and this week it depends on how the FOMC, how the markets react to FOMC. If the markets react negatively, then the candle that you want to get is a nice long red candle that takes out both of these gaps, which, I mean, that's how much of a move is that to here? I mean, yeah, that's, if that A6 here triggers a green dot, that's probably when you've reached the maximum downside move for the week. Because once it sells off, then you're gonna, let's take a look at the fib level. So that fib extension level will be using this candle in here, and taking it from there to there. Yeah, Lucid has a target of $20. If I were to get into puts on this thing, I would not use weeklies. I'd probably get like 1 week out, especially after triple witching. The market gets a little bit bearish, more bearish. So having puts for the following week, but the problem is Wednesday the S&P could react bullishly from the Fed comments, and that's the worst part. We know the market's going down, but the Fed is going to step in on Wednesday and make those puts a little harder to hold, right? And if you're going to try to do it, then and because we don't know how the market's going to react to the Fed, then you'd have to force yourself to trade light, like trade one contract, two contracts, Or if you have like a $10,000 account, trade like $100 or $200 max until that gap fills, and then just assume it's going to happen or not happen, because nobody knows. And if it works, then I mean you'll still make money on 1 or 2 contracts, not as much as if you had like 10 or 20, but due to the uncertainty, I don't think anyone could really make, unless you just don't really care about money, I don't think you can make a real good guess on what Wednesday's going to bring to the markets. Yeah, but eventually the market will pick up, and it's going to be a pretty crazy run when it does that. But I think that discussion is going to be a lot more valuable after we see the market fill a gap at S&P gap at 4,000. In the meantime, how do you know which way the market's going when you got FOMC on Wednesday? Okay, so one last check on the futures. So futures is the VIX is still down negative 2.75%. That's not that big of a deal, right? Because it's kind of making a rounding bottom here. And the Nasdaq is up 0.63, but still trading under that green dot. So whether to go bullish or bearish, whether to be bullish or bearish on Monday morning will be dependent on how the futures trades from now to 4 a.m. And you'll get a sense of, like, the direction is obviously lower because we're assuming the S&P gap at 4,000 is going to fill sometime this week or next week. Any bounce, it could even bounce tomorrow to 21-day moving average, right? So I don't know if I could trade those, right, when I'm planning to wait for the flush, if the flush happens, but it should. I just can't really tell which one I would go into puts or calls tomorrow morning. Even though right now it's green, it's just a small little bounce after the sell-off we had on Friday. Currently, most of the the 750R systems are short, so I'm leaning based on the positions here in the system. They're in a short position, so it's obviously assuming the market's going to be trading lower on Monday. But if the market keeps on trading higher throughout the night, then it's going to be a short squeeze into Monday. I won't know until 4 a.m. Okay, so that's about it. Thank you very much for your time, and I'll see everybody tomorrow morning. Have a great night.